All right, back to work. It's about that time of day again here after all. Wednesday evening, it's July the 8th, 2020. My name is Joseph, and as always, welcome back to your nightly newsletter. Now, if you're here for the first time tonight, it's great to have you with me because my job this evening is to help us find the best entry setups for tomorrow. That's Thursday's trading session, and I got a pretty good video in store for you guys and gals tonight. Lots of great setups I'm tracking for tomorrow. Got the oil, we got the S&P, of course, and we got the gold, right? The yellow metal. Got a lot of failed rotations as I look at the charts here tonight. Failed rotations, momentum confirming, maybe momentum doesn't confirm. We'll talk a lot about the details. I'm excited to share all the setups I'm watching for tomorrow. Before we jump in, though, and get our hands dirty on this video tonight, though, I just want to make sure to remind you guys, subscribe to our YouTube channel. That way you never miss all the good stuff we publish every evening on our newsletter. And don't forget, if you have any questions for me, drop those questions in the comment section below. And as always, if you tune in every evening to watch this video, if you're like me and you rely on this newsletter to get your mind right and get your charts right for tomorrow, hit that thumbs up button for me, guys. I always appreciate you sharing the love, supporting this channel by subscribing. Type those questions in if you got them. And as always, hit that thumbs up button if you guys enjoy the video tonight. But enough of the introduction. Let's get this party going here. Jumping into the video tonight, I want to kick this thing off with the calendar for tomorrow. Let's grab the schedule for tomorrow. Tomorrow, of course, is a Thursday. And let's see what we got going on here for tomorrow. Tomorrow, of course, is almost to the end of the second week of the month. We've been talking about kind of this slow news week, this second week of the month, usually going to be a relatively slow news week. And it has been. There has been a lot of news headlines that we can work with this week, but that has definitely not stopped a lot of great volatility in the markets we like most, right? Big moves on oil, big moves on gold, big moves on the S&P, and maybe a big move on oil for tomorrow. Speaking of tomorrow, though, let's see what the schedule looks like here. Tomorrow, of course, Thursday, July the 9th. We don't have a lot on the calendar. As you can see, tomorrow, all we really have is that jobless claims report at 8:30 Eastern time. I will definitely want to be at my desk around 8 o'clock tomorrow morning because the news headlines coming out on jobless claims right now, they have been moving these markets. Now, don't forget, we'll be at our desk tomorrow in our trade room, 8 o'clock Eastern time. So we'll get prepped up nice and early, get the charts updated, right, and then get back after it after that news comes out at 8:30 Eastern time. Don't forget, guys, I'm not trading the actual news report. We're going to wait for that news to come out, give it 5 or 6 minutes for the dust to settle, and then trade the reaction, right, to that news report. I don't like to trade into those news reports or try to gamble on the reaction of the news report. So tomorrow morning, 8:30 Eastern time, that is really the only big news of the morning. We get some small stuff later on, right, in the day, but that's probably not going to be where the best stuff happens for tomorrow. So if I could be at my desk tomorrow, 8:30, definitely want to be at your desk those 25, 30 minutes after that news report. And I'll remind you again, we continue to see some of the best setups in that 10 o'clock to 11 o'clock hour. So tomorrow, we might have a pretty darn full boat tomorrow. News early in the session. Stick around late in the session with us, right, and trade into that lunchtime hour, that 10 o'clock to 11 o'clock hour. I'm really excited for tomorrow's trading session because we got those jobless claims to kick off the session. And don't forget, tomorrow morning, we'll be in our trade room as we are every morning, 8 o'clock Eastern time. I would love to have you trading right there with me tomorrow morning. I'll put all of the information to get registered as a member and join me every morning in our trade room. I'll put all that good stuff in the description of this YouTube video. So grab the link, get registered for tomorrow morning's trade room, and I will see you guys there at 8 a.m. Eastern time. And be on time too, because I want to make sure we get prepped up for that jobless claims report at 8:30 Eastern time. We'll come back and talk about Friday's news. We get some big news on Friday morning. I'll come back tomorrow night on tomorrow night's newsletter and get us ready for Friday. So into the end of the second week of the month. It's been a slow news week, but has not been a slow moving markets, right? We've seen a lot of movements this week here so far. Let's jump to some charts here now. Now that we're on schedule here for tomorrow, I got the S&P, I got some oil, and we got some gold on our radar here tonight. Jumping in first, though, I'm going to grab the S&P 500. S&P has a lot of really good clues. And I talked about failed rotation, right, in the introduction. I talked about failed rotation, momentum confirming or not confirming, and that is definitely something we're seeing here on the S&P. What do we know about the S&P right now? We know the market was pretty much a range market, right? At the beginning of the session, we go up, down, right? Pretty much a range-bound market. Range-bound markets, of course, what do we know about ranges? They're balanced. The range itself acts like a magnet. But most importantly, we know there's what's called rotation, and that means the amount of the move below the range is usually the amount of the move above the range. The amount of the move above the range is usually the amount of the move. No, it's not, apparently. And this introduces our first big clue here on the S&P. It's called failed rotation, right? So once I know how big that range is, and I'll go over some more details of that, how we find those ranges in our video classes, and of course, we'll do it together every day in the trade room. We know we have the range right there. And we could easily see, right? The market rotated down. They clearly broke through that, right? They achieved their rotation on the side. We expand out that rotation now, and they should have been able to get right down around that pendulum swing, right? We should have at the very least, we should have at least seen those sellers take out those lows. But look what happened. They pulled the string on it, didn't they? They failed to retest the low. And then what we really want to see is the proof. Look at the momentum swing. 1, 2, 3. Nice, strong move higher. This is what I call in my trade room failure into confirmation, right? We fail to complete one objective, and then momentum confirms in the other direction, right? Momentum confirms it because, let's be honest, right? A failure isn't just a guaranteed reversal. You've got to get that confirmation, right? And once we have confirmation now, even though we have a range market right now, and typically in a range market, I'm buying low, I'm selling high, this failed rotation into this bullish strength, let's put it this way, it makes it very difficult for me to want to be a seller until we can get up to some of these highs up here, right? Get that 31.74 and really the big top here, those buyers would love to get their hands on tomorrow, that 31.84 area. So we are range bound, but a failed rotation along with a momentum confirmation now gives me an idea of what direction I want to be trading in. I know I want to be buying in this situation now. And so now my job is to find levels of support. Now, if you watch this newsletter if you watch this newsletter every evening, you know these are called 1, 2, 3 reversal patterns. And anytime I see these 1, 2, 3 moves, I'm going to draw a trend line off the high, and that's going to give me the ability now to find that support level at the low. So my job right now is to find a support level that I can trust to be a buyer. And if I had it my way tomorrow, I'd be buying off the low of that hidden channel tomorrow. If I had it my way, right? That would be my kind of dream pattern here for tomorrow. Ideally, what I'd like to do is, and you'll notice here, I've measured that leg. I'm going to use that same distance to project that measured move. That will be the target. We just don't know how far it'll pull back yet. That's the only thing we don't know right now. I know how much this leg is, right? Once I do, if we get the pullback, hopefully we do, right? Then we can measure it up from there, right? These are going to be symmetrical on that next pullback. So just be aware of that. That's what that arrow is there for. But ideally, if I had it my way tomorrow, I'd be looking for a pullback down to the low of this channel. That should put us just below the moving average. And I hope we do. Hope we get that nice deep pullback there below the moving average, because hopefully we'll see sellers who look at this over here and they think we're going back down in, and hopefully we'll get some sellers here who will try to sell that pullback. Once they do, I know exactly now where my stops are placed, right? I know exactly where those stop losses are going to be for those sellers, and I can buy, of course, now I can buy into stops. I can buy the pullback off the moving average, right? And we can make that run up to those targets that I had mentioned earlier, right? So it's a seller failure into a bullish pullback. These are usually very common combination setups, right? So again, that failed rotation into momentum, confirming the move going higher. I'm looking for support, marking up my highs, finding those lows, Get me that pullback. Give me that seller failure, right? Again, get those bears to come in and try to short this thing. Once I see them getting short, they're on the wrong side of momentum. I'm looking to buy into stops and again, buy into those pullbacks on the way back as we go higher. Very, very exciting opportunity here setting up on the S&P 500. Now, one very valid concern might be, what if we don't get that deep pullback? There's a couple things I would definitely keep in mind here. If for example, let's say, for example, the market keeps going, right? Let's say it keeps going. If it does, let's just say it keeps going here, and let me draw it up like this maybe, right? Let's do it like that. Let's just say it keeps going here a little bit further, right? So the S&P, right, it keeps on going, and then it pulls back. This is the same idea, right? Same idea. All of that momentum, seller failure, right? Buyer pullback, and in from there, right? Failure into pullback combination. So if it does continue to run higher here, I'm looking for that pullback. Another situation I'm watching for here would be, we call a two-try trap, right? So we strong move up. Let's just say, for example, the thing keeps on going, right? Keeps on going. As it pulls back now, watch for a shallow pullback, a higher high, and a trap low. We call these two-try trap patterns. Again, it'll keep on going, right? It'll keep on pushing. The momentum will continue. You'll see a shallow pullback, which will usually just barely touch the moving average, followed by a higher high. And once you see that strong move, shallow pullback, higher high, you know now there'll be buyers waiting right below that low. Now, if this thing continues to push up like this, right, what I'll do is, again, I'm looking for those channels, right? I'm always trying to find those reverse channels to find those support levels to incorporate, right, as a key area of support. But that's another pattern I'm watching for here as we go higher. So now you get a pretty good idea of kind of how I'm looking to trade this thing, right, as it goes higher. Failure patterns, pullback patterns, trap patterns off of those hidden channels. Now, I'll tell you, these hidden channels I'm drawing in, these are about as close to magic as they get when it comes to trading trending markets, momentum, right, moving markets. And I talk a lot about these hidden channels and all the techniques we use on the newsletter in our free trading course. I would definitely recommend, if you haven't done so already here, grab the free trading course. I'll put a big little pop-up there in the upper right-hand corner. Grab that free course, get registered, that we can learn more about all of my favorite setups, failures, pullbacks, traps, hidden channels, ranges. That way, the next time we see each other on the next edition of our newsletter, you'll be well versed on all the terminology, and you'll be able to really dig your heels in with me every evening on this video. So don't forget, grab that free course. It linked up there right in the upper right-hand corner. And then don't forget, like I mentioned earlier, I'll put all of the trade room information, all the free trading class information. I'll put all of that in the description of this YouTube video. So dig right in, right? Get registered either for the trade room tomorrow morning or for that free trading course linked up in the upper right-hand corner. Now, could I sell this market right now? Right? How do I sell this thing? Well, the hardest part right now about being a seller on this chart is going to be the fact that it's so bullish. You know, that's the hardest part right now. So how do I sell this market? Well, there's only two basic patterns I'm watching for to be a seller. I really don't want to try calling this top just because this momentum is so strong. See how they went through that measured move, right? See how they blew right through it? They got it, right? But nobody cared, right? They blew right through it. Make note of that. Make a mental note of that. I'm going to come back and talk about this technique, right? How it blew right through that measured move. I'm going to talk about that on gold as we get a little bit later on in this video. So just remind me, once we get to gold, remind me to go back over this again, because this is a very good clue. See how, again, right? There's obviously a measured move there, but did they care about it? No, they didn't. They blew right through it. Gold does not have that right now, and it's a big, big clue for the bulls. I'm going to talk a lot about that here in a second. What I want to make sure I cover, though, is how do I sell this market? We're way too strong to the upside right now to try to pull a rabbit out of our hat, right, and sell this high here. So really, I've got two scenarios I'm watching for. My favorite short trade right now would definitely be a strong pullback, buyers trying once, lower low, buyers trying twice, and a trap high. Now, the reason why I need to do it this way is because of momentum. As I mentioned earlier, that momentum is just simply too strong for the bulls. So I can't trust the short off the high, and I can't trust trying to sell it because, again, as I mentioned earlier, I'm looking to buy into sellers' failures, right? So what I want to do is I want to get us back underneath the moving average. I want to see buyers come in, try once, go a lower low, try twice, and ideally I want to trap up above those highs. That will absorb the momentum. First of all, it'll get the buyers, right? It'll get the buyers fully committed. So once those buyers are fully committed, once the buyers are on board, then I can start looking to sell into their exits and get that run back down as we go. Another thing you want to keep in mind would be too, if the market does, let's just say collapses here, right? If it runs right back down into that range here again for tomorrow, that momentum now turns bearish. As you can see, we're back inside of our range. And what do we do in a bear market with a range? We sell above the range using what? Using a failure pattern, right? We get above the range there. We wait for those breakout pullback buyers to come in and try to buy the pullback. That tells us exactly where their pain points are, right? Where their stops are, and we can sell right into those stop losses. So if it does end up back inside that range, you know what to do, right? Keep on focused, right? Stay focused on that short above the high. Those are two setups I'm watching for here on the short side. Now there is possibility, as I mentioned earlier, wild day today, big move up, big move down, big move up. There's a possibility this thing completely rotates, right? We go 1, strong move down, pull back to the moving average, 3, move over. If I can get a real strong move down, I know exactly where those bears are trying to get to. They're trying to get back down to that 25, that 31.25. That's the level they missed earlier in the day. As long as I can get that 1, 2, 3 reversal, and I can really see some strength through that range. That'll be key. If it just sits inside that range, right, that's not going to be my idea of a good time here. If I can get through that range, though, on some strength, I then can structure my trade on the way down to retesting that low, mark up that low, mark up that high, and I can look for my short off the high of that hidden channel. These are the same techniques as I'm using for the buyers, right? 1, 2, 3 going up, 1, 2, 3 going down. And obviously there may be some nuance to this tomorrow as we see this stuff develop. And I'll walk you guys through it as we see it in real time tomorrow morning in our trade room. But at least for now though, you know the plan. If this thing keeps on pushing, if it goes right, if it gives us the pullback. And also too, don't forget too, if the market, if it rallies higher here and we start seeing a range up here, right? It could easily happen. Again, it's kind of a light news week this week right now. So if we do end up going sideways up there, okay, it's okay. Just wait for the pullback. Wait for that seller failure, right? Wait for that pullback. Wait for those bears to come in and try to get short off the EMA and just buy right into those stop losses. So we know how to trade the pullback. We know how to trade the move higher. We know how to trade it if it goes sideways here, right? Fade those breakouts, buy underneath that range if it goes lower. And again, I cover all this stuff in that free trading class linked up in the upper right-hand corner. You will definitely love that free course. Everyone loves that free course. All right, let's keep going here. So the S&P is looking good here for tomorrow. We got a failed rotation into strength. Now, over on the oil. Boy, the oil was an ugly, ugly market today, wasn't it? It was not the prettiest thing in the world. You can definitely tell the oil market is going through some turmoil right now. We're seeing a lot of news reports right now out of OPEC nations. We're hearing a lot about storage capacity filling up. Right, there was a huge inventory build from the inventories today. So it's definitely a wild market right now. You can see the choppiness we saw on this chart here today. So definitely requires some patience and some discipline to be trading oil here this week. But that's okay, because whenever I see markets do this, whenever I see markets that get all coiled up like this, you know what happens, right? The markets go through cycles. They have these big trends, then they have these chops, right? Then big trends, right? And then chops, right? So this will not last forever, and very soon you'll be rewarded by your patience by getting some nice follow through. We're not there yet, but just be aware, right? These types of market conditions, they're not going to last forever, right? The market will kind of work itself out, right, as it does, right? It has been doing for hundreds of years. What do we know about the market right now in crude First of all, we know it's a range market. It's been pretty much a range market all week. We also know we have this strong breakout, right? That strong breakout. That is what? Momentum, right? Momentum is a big problem or big clue on this. But I want to remind you. Do you remember last night? Remember last night on the newsletter? Last night on the newsletter, right? We had this. Right, we had this this range was a little wider, a little bit higher here, and we were talking about getting that rotation going lower. Well, look what happened. They never got it, did they? Right, the bears never got their move lower, and there's this very easy to feel kind of bullishness, right, to this market right now. You can see the channel I've drawn on here. This market makes it very difficult for me to want to sell it right now. It just feels very bullish. A lot of this is because we keep going above the range, but we can't quite get below the range. And so again, I call this failed rotation, right? When I have a trading range environment, if I have a range and I see us, right, and we're popping up above the range, but every time I go below the range, they're not getting there, right? They're not balancing it, right? They're not getting us the pendulum swing. They're not getting us that full rotation, as I call it. And they're getting stopped here, right? Going up, right? And coming back. They're not giving me that full range rotation. The pendulum should be swinging back and forth here. That lack of rotation, right? That lack of bearish rotation combined now, again, with momentum confirming, definitely gives me the bulls on the right. And again, I think this one, you can almost kind of see it if you were to look at this in a bigger picture. You kind of see it. It's range bound, but it has this very slight bullish tone to it. So knowing that, that's going to be probably the most important clue here as we go into tomorrow's trading session. Now, how do I get long on this? This is going to be a tough one. This is going to be a tough one. I'm going to warn you on this one. You might want to stretch, drink some Gatorade, wear a helmet on this one. This might be a little bit more difficult for tomorrow, especially for the rookies out there who don't have as much experience with how ranges work. But the bottom line, though, is that, let's see here. If I could be a buyer right now, what I don't want to do is I don't want to buy high. I don't want to buy up around these highs because in a range-bound market, buying high is just, it's just trade suicide. So you don't want to be buying high. If the market keeps going, well, then we can use that as a breakout. But right now, though, all we know is we're pretty much right at what appears to be the high of a channel, right? The sell zone above the high of this range. I can definitely see the buyers are controlling this right now because they're holding above the moving average so well. They're not rotating back down. Okay, so if I had it my way tomorrow, what would I be looking for? Well, I know it's a range, and I know that range will be a magnet, right? The range is a magnet. It's going to try to bring this market back down into that trading range again. I also know that all of this bullishness means we're probably not going to get a full rotation. Right? So I'm kind of using what we've already seen here. I want to be a buyer going low. I want to buy low, but I don't want to be too aggressive on this because it's a range-bound market. If I had it my way, my kind of dream come true scenario here for tomorrow would be getting a pullback down to the low of that channel. And then because it's a range, I'm going to be a little more conservative. It's bullish, so I do want to be a buyer on this right now. So my plan will be for tomorrow, I'm looking for what I call a nested failure pattern. Now, if it wasn't so damn nasty back here, I'd be a lot more confident with a seller failure into a bullish pullback combination. The problem, though, is I just don't trust that. I just don't trust it. What I'd rather do is I'd rather play it a little bit safer, look for the bears trying once, look for the bears trying twice, and then once I see those bears wrapping that rope around their neck, right? Once I see those bears digging that grave for themselves here, now I know where their stops are, and now I can buy into those stops, right? We saw a very good example back here, actually, right? We went lower, right? The bears tried once, the bears tried twice, and then back up we go from there. Wasn't pretty, right? But that's the same idea here on this. So we're bullish. I want to buy at support. I really like this channel. What I don't like, though, is this range. And to avoid the chop that comes with the range here, and to avoid the potential where it rotates all the way down, if I can get that pull back in, I'm looking for bears. Again, let them show you proof. Let them try once, let them try twice, right? Higher high. highs 1 and 2. Once you see that nice signal candle coming off that low, right, that nice juicy green candle running right into stops there, right, we're buying into those stop losses. Then if we can get it, I'll look for that pullback combination on the way back up. That will be my kind of creme de la creme, right, of the buy setups here for tomorrow. Now, it's also very likely here, too, that they're going to get a breakout, right? And the problem is you can't really predict a breakout. If we do see them hold, right, if they can hold that breakout and push through those highs, you know my plan, right? I'm going to mark up that high. I'm going to mark up that low. Look for that first pullback, right? We call these 1, 2, 3 breakout patterns, right? 1, 2, 3 breakouts into a hidden channel pullback. Now, that hidden channel pullback, keep in mind too, it's not necessarily a pullback pattern, right? One of my 4 favorite entry patterns. It's not so much a pullback pattern. It's more of when I get to the low of that channel, it's usually going to be, we've gone up, we pull back. Usually when I get to the low of that hidden channel, it's going to be a seller failure into a pullback combination, right? Something like that coming off of that low. So if you were to kind of zoom in, right, on that area, that's kind of the setup that I'm looking for. And don't forget, I go over all of these setups in that free trading course that I mentioned earlier, linked up in the upper right-hand corner. That way you can see examples of what they look like. In fact, I've got hundreds of examples in our free trading classes about my favorite entry setups. So make sure you grab the free course before you finish up here tonight. So that will be the ideal, right? Get the pullback or get that 1, 2, 3 breakout going higher here, though. How would I sell this market, right? How would I sell this thing? To be a seller on this is a bit of a scary idea here because of that big strong push higher, right? That strong move. Anytime we see a strong move like that, it's almost a certainty we get another leg higher. What we don't know is how we get that another leg higher, right? Do we go higher or do we pull back? That's what we don't know here. So I can't just try to buy the pullback here. I'm waiting for that deeper pullback. Now, how do I sell this thing right now? The only way to really confidently sell a bull market, we are at a turning point, so I'm not too opposed to selling it. We are at a turning point. I'm not a big fan of going against the trend, which is obviously bullish right now. So the only way to really do it is be a crown reversal. I've got 1 try for the buyers. I'm waiting for a lower low. 2 try for the buyers. This would be a relatively aggressive trade. They're all, anytime you're trading against momentum, it's always going to be a little bit aggressive, or a little bit lower probability here. But that will be my plan here for tomorrow, right? So if we start seeing the buyers have already tried once, right? If they come back, pull back, and try a second time now, lower low, second try here now. If I can get that trap high, that would be a pretty darn good setup here to get short off those highs. Keep in mind, it's obviously against the trend, it'd be lower probability, right? We never expect to be perfect on counter trend trades, but these, of course, again, at a major turning point, not a bad spot here for it. I also think too that, let's just say, for example, the market was to collapse. Right, if it was to collapse on the way down, another one of those setups, right, would be that 2-try nested, as I mentioned earlier, right? So that would be an option as well. Now that one clearly is not as attractive as the crown reversal off the high. So that's my favorite. My favorite would be that 1-try pullback, that 2-try, that trap, right, and that go from there. Now, if we end up back down into this range, and we start hanging out here down inside this range right now, I can continue here to look for sells above the range. So if we collapse back down to that range, we sit inside the range for a while, right? If we can get proof that they're sitting back inside that range, if I can get that momentum to hold going lower, I can now look for those buyer failure patterns up above the top of that trading range. But just keep in mind, though, we have to make sure that we get this thing back into the range, get it confirming that sideways movement. Then I can look for what I call a buyer failure pattern. Basically, what you're doing is you're trading against that breakout pullback pattern up above the high of that trading range. I would also too be looking out for buys underneath the range here tomorrow. If we end up, let's say for example, we collapse down. If we collapse down to the low of this range right now, that's a great example of where a nested failure would be very, very useful here. So if we make it below the range here, Then, of course, that momentum now is very bearish. You have to imagine there's going to be a lot of buyers who are waiting below those lows down there, I would imagine, right? Because we haven't seen much of that rotation yet. So if the market really tumbles and really hits those lows, right, takes out some of these lows here, I definitely don't want to sell that because it's a range. I want to buy underneath the range, right? Remember that earlier? And we know that overall we're very bullish right now. If we get that big pullback, that big kind of collapse off the high, I'm concerned about the momentum of the bears, but I want to be a buyer at the lows. So what I'll do is I'll wait for the bears to try once. I'll wait for the bears to try twice. I always like to put a little trend line there at those lows, right? Get them to try once, get them to try twice, right? And then we're buying off of those lows from there, right? Does that make sense? Right? So again, we're looking for that move below the range. We get underneath the range now. Under the range, momentum is too bearish to be that aggressive, but we're under the range. I want to be a buyer. Let them try once. Let them try twice. I like to get those trend lines coming in and buying off that trend line. Another pattern would be, of course, if we get the crown reversal, strong move down, shallow pullback off the moving average, higher high, trap low, right? This is kind of a nested failure, right, on steroids, if you will, right? That will trap low there. That's going to be the best way to buy off of those lows. So again, I want to buy low, but that momentum will be a concern, which is why I'm going to use these nested patterns. All right, guys? So again, not going to be an easy, not going to be, let's be honest, right? If it really jumps, that really makes our job a whole lot easier, right? Because then we can mark up that high, mark up that low, and I'm looking to buy the low, right, of that hidden channel. Targets as we go higher here, 41.63. 41.63 is a nice juicy target for us as we go higher. The sellers, of course, they want to get all the way down to that pendulum swing, right? But again, if we do make that move lower, nested failures, right, crown reversals off of that low, hopefully though, get that pullback, let those bears try once, try twice, and I can buy into those stops here tomorrow morning as well. That would be kind of my dream come true here on the crude oil. How about questions? Any questions so far? Drop those questions in the comment section for me, and I'll circle back and get them answered once we finish up. Don't forget to subscribe. Hit that thumbs up button for me if you guys like the video so far, and make sure you grab the free trading classes. Again, linked up in the description of this YouTube video. Let's keep this party going, though. Over to the gold. Now, I promised on the gold I would talk about a specific technique we saw on the S&P, right? Let's go back there. So thank you for reminding me about that. Remember how earlier I talked about how the S&P had got through this measured move, right? That leg and that leg, right? And you can see they keep on going here. Whenever I see them exceed, right? Whenever I see them exceed those measured moves like that, I know that momentum is very strong, and I need to abide by it. Right? So especially in this example where the market was so bearish, and then it goes 1, 2, 3, and see how it runs like that? That's obviously a bull market right now. Okay, and the key here is it exceeds the measured move. It's jumping off the moving average. It's pretty obvious. Now, look at the gold now. Right? And look at the gold now. And let's walk through this now, and I think you'll see why I want to be a buyer on this. Even though it does look like this market has reversed, there's a big clue on this chart. What do we know about the gold right now? We know the gold is long-term bullish, right? That is for sure. We know that we got the 1800 level now acting as support. The next big round number is 1900 here on the gold. And if the gold bugs have it their way, they'll be back to 2000 here before they know it. But for right now, though, what do we know about this? We know we have a very strong move higher. Now, I will say this strong move higher, anytime we see a strong move higher, what do you expect? Another leg in the same direction. So I will definitely say the buyers did get what they were looking for. The buyers technically have kind of satisfied, right, their momentum, right, if you will, right? So strong move higher. We do expect a pullback. We got the pullback, and they got their retest. Okay, it's a clue, but it's not a big clue, right? The big clue here is look what happens on the reversal. We get that 1, strong move down, 2, pull back to the moving average, and 3, strong right? No strong jump off the moving average. Remember, I should be able to take this length right here, and I should be able to measure that. And if they broke through that low, right? If they went right through it, if this was trading down here now, I'd be saying, okay, we're bearish. But we're not. I'll be honest. This one's a tricky one because at first glance, it does look like this market has turned. It definitely does. At first glance, it does look this market has turned bearish. But after further investigation, I don't think these bears have as much momentum. So we talk about momentum confirming. This is momentum not confirming on the gold. And since I can see that strong bull move up, and I see those bears are really trying, but they couldn't get the job done, that tells me now I want to, A, look to be a buyer here. And because there's some confusion in the chart right now, I'm definitely looking to trap in some of these sellers to get the job done going higher here. So strong move higher. The deep pullback didn't go through the measured move, and now we're looking forward to retesting these highs here. Now, I've got a lot of forces in play right now, right? Buyers are here, and I would assume there are going to be some sellers in this market. If I was a seller, where would I be trying to get short? I would mark up these lows. I would pop at the highs to find that hidden channel, right? I wouldn't draw the channel off the highs like that. I would draw the channel at the lows first. Let's get rid of this here and make this a little bit simpler, right? So again, 1, 2, 3 move. Okay, I'm drawing off the lows, up around that high. And I can see there's a couple swings right there. Swing right there, swing right there. If I was going to be a seller on this, this is definitely where I want to be selling. It'd be selling off the high of that channel, selling off my battle zone. So I don't think this market is bearish any longer, or at all for that matter, right? I don't think the bears have it, but I do think there'll be some confusion. So where can I catch those bears? Right up around that 21 to 23 area. Now, what is the best way for me to absorb some of those sellers and then use their stops as momentum to go back to the highs here? I want to use what I call a nested failure, right? A nested failure. So I know my sell zone is, as we go higher here, I'm waiting for bears to try once. I'm waiting for bears to try twice. And ideally, I want to get as deep of a pullback as I can to buy off of that trend line. What I really want is, I always want to buy at support, right? I always want to buy at support. So for example, if the market was to run higher here and then do it there, that's going to be a very difficult pill to swallow because you're right back up to resistance. What I want is I want us to be one try, pull back. I'm going to draw a trend line off of that low, 2 tries, and then I can buy from there. Now, obviously, this may this may not be as picture perfect as I'm drawing right now. It may stack on top of itself, right? It may go 1, it may go 2. That works as well, right? But the reality, though, is I want to see us go up around these highs. 1 try for the bears, 2 try for the bears. I just want to make sure that this second try is a decent sized second try, right? Because that's going to allow me now to buy off a support level, you know what I mean? Draw a trend line up. I can buy off that support level. I'm not buying too high there. That would be the pattern I'm looking for. Buyers trying twice, and of course, buying into those stop losses for that run going higher. Now, if we don't get that nested failure, if for some reason the market does kind of jump higher here right now, watch for a trap, right? Watch for a trap. The next best thing here now to avoid buying too high will be a trap. So if for some reason it does slip through the highs here, kind of slips through that battle zone, as I call it, right? Look for 1, look for 2, right? And I'm buying off the trap low. The trap will be better to avoid buying too high. All right, guys? So the 2 patterns I'm watching for right now are going to be that 1, 2 nested failure. Again, I want to make sure I can get this off of that kind of support trend line, get it under, or get it as low as I can get it. If it really spikes up, then it's 1, 2, and again, I'm looking for traps now to basically absorb the or basically get away from buying too high there, right, as we go higher. All right, guys, that's good. Those are the nested seller failure patterns right off of that low. Not the easiest of setups because this is kind of a tricky situation here. But again, wait for those bears to try a couple times up there to get short and buy into those stop losses as we make a run back up to retest the high. Now, what about the sell side here? What's the best way to get short on this thing right now? Really, at this point, I need to see more confirmation. So I need to see this market continue going lower. Once I see it continue, well, now what I can do is I can measure that new low, I can find my new high, and I can sell off of that new high. So let's just say, for example here, right? Let's say, for example, the market pulls back to the moving average, keeps going now. If I can get another strong move down here, we have to assume the bears are trying to go back to that range where we left off from last night. And at that point now, I have momentum I need now. Now I just need to make sure I find that level of resistance. Find that low, up around that high, and looking to sell off the high of that channel, right? And again, I call these 1, 2, 3 reversals into hidden channel pullbacks, right? That hidden channel pullback, it could be a buyer failure, it could be a bear, it could be a bearish pullback pattern, it could be a bull trap. We'll kind of go over those tomorrow morning in the trade room once we actually see this stuff starting to set up here. That would be by far the most reliable way to sell this thing right now, because I just don't dare sell it as the market goes higher here because of all that momentum, right, for the bulls. So that'll wrap it up here on the gold. Now, there's obviously some other options here, right? For example, if it runs higher and goes sideways up here, right, this may become a range. If that is the case, we'll then look for buy setups below the range, using, of course, those seller failures below the range low. Anytime I see a range in a bull market, I'm looking to buy underneath that range with a seller failure. If the market really starts to rip as it goes higher here, there's not a lot up here, right? But hey, if we get one more of these bad boy moves, right? If it does, strong move up, pull back, and then jump, right? What do? You mark up that high, right? If it does jump up, pull back, and jump, right? We mark up that high, mark up that low, and just keep on buying pullbacks, right? Keep on buying pullbacks, right? Market goes 1, 2, 3, mark up the high, mark up the low, right? Buy those pullbacks, right? So as we go higher here, I'm not afraid to buy it as it goes higher, but if I can't get that 1, 2, and buy low, I'm gonna wait for that strong move up, that pullback, right? And that run from there. If they can hold that pullback and jump, now I know I got a bulls, another run higher, mark that new channel, and we're buying the low of that hidden channel. All right, guys, relatively simple plan here. The entry techniques can be a little bit difficult because there's a lot of different people in the market right now, but that's all right. Tomorrow morning, we'll do it together. Looking forward to seeing you guys tomorrow at the opening bell at 8 o'clock Eastern time. Don't forget, too, you can get all the information to get registered. I'll put all of that good stuff for you guys in the description of the YouTube video. If you're on the blog right now, I'll put it right below the videos tonight on the trading blog. There'll be a big button for you there to get registered as a brand new member. Don't be afraid to call me tonight in the office. If you have any questions, call that toll-free phone number. If the phone isn't a good fit for you, use that live support tool on the right-hand side. But whatever you do, though, have a great rest of your evening. Thank you so much for tuning in. Make sure you come out and see us tomorrow morning in the trade room at 8 o'clock Eastern time. We'll trade this stuff together. If not, we'll come back doing it tomorrow night, right? 8 o'clock Eastern time tomorrow morning, or I'll see you guys and gals on the next edition of our nightly newsletter. We'll see you guys tomorrow night, same time, same place. As always, my name is Joseph. Be well out there. Be nice to each other, will ya? And be here next time. Adios, amigos. Bye-bye for now.